Hey guys, welcome back to another video. Today I want to run through the fundamental analysis for the week, as well as go through some of the trades that I'm currently in, where my headspace is at for them, and I'll also do another video to recap June 2026. So let's just get stuck right into it. This is fundamental analysis for the 7th of July to the 12th of July. As per usual, this is not financial advice. This is just purely my take on the financial markets, where my headspace is at. Please use this for entertainment purposes only. So, the first thing is COT reporting. So quite an interesting change in terms of with COT. We have had a bit of a bias change again with USD compared to the other two currencies I'm trading, Aussie and Yen. Looks like USD is slightly more bullish from the open interest long, the net positions, etc., etc. So we've got some bullish momentum on the dollar. Not much, very negligible, but compared to the Aussie and Yen, it is apparent. So just going based off Aussie, sorry, not so much Yen, but Aussie definitely. Aussie, we see a net position change of 39.3% out. People are losing interest in the dollar. We've also got a change in long and short. So pretty much that 44.9% to 42.7%. And if you guys watched my previous video on the fundamental analysis of the previous week, we saw a drop in longs for Aussie as well. So Aussie definitely losing a lot of steam. With the yen's actually picked up 20.2% on the net positions, meaning there's people that are starting to enter the market. We've got a change in longs and a change in shorts and a slight increase in longs. We've got some bullish momentum on yen, and it is supported with the financial sort of news and economic data that I track. So definitely bullish on the yen, and dollar definitely bearish on Aussie. In terms of from a indices point of view, again focusing on US 30, which is the Dow Jones, we do have an increase in open interest long. However, we also have a net position change of minus 4.9%. So a bit of interest lost in trading the Dow Jones, but in terms of with long, we do have key plays still longing more than shorting on that indice. Last one, gold. Gold is still heavily long in terms of from the long term, still heavily bullish, but we did have a little dip to 85.6 from 86.6. So we are in a gold position. I'll go through that trade a bit later on, but that's just COT reporting for the week. In terms of economic data, we had one print this week, which was services PMI, which came in neutral. After that print there, it pretty much ticked my economic reading for USD into neutral territory. I will wait for more data sets from this point to shift my bias on longing or shorting the dollar right now. So right now I'm pretty much neutral on USD. AUD, I'm heavily bearish still. Still heavily bearish. Aussie, happy to trade the US dollar against the Aussie based off that bearish sentiment from Aussie. So just FYI, the better trade would be Aussie Yen, AU, or AJ, sorry. And basically we've got PPI being bullish or hotter than expected, ticking that verdict slightly to bullish in terms of the inflation readings. And economic data, we had average cash earnings and household earnings sort of hotter than expected for household earnings, cooler than expected for average cash earnings. So still overall bullish, has lost a little bit of steam compared to the previous week, but again, compared to the other currencies, very much bullish. So no change in these data points. My bias So bias from a gold perspective, we had bearishness on the COT reporting. We had neutral economic news, neutral in the sense that we've got bearish inflation, which is good for gold in longing the gold. We have neutral US economic, which is pretty much neutral. I would say probably better for gold than worse than gold. But we've got bullish labor market, which is bearish for gold. So really unclear signs here. There's no real one way for this one. So I'm going to change this to no trades available. I'm not going to trade this one. US 30, we've had that loss of steam in terms of with the neutral US economic data. So I'm definitely not trading that. AU, like I said, USD is quite neutral right now, but Aussie is definitely very, very bearish. Therefore, COT reporting was also slightly bearish as well. Economic news, I'd say, is bearish +1. Technical trends bearish, so I'm happy to short that. Let's just change some of these data points. So happy to short that. This is neutral USD, neutral. Okay. UJ, we've got slight bullishness in the yen, neutrality in the US dollar. The technical trend is still bullish, so I can't even short based off my rules, so I'm not going to trade that. AJ is probably the golden ticket right now for the week. It's favoring COT reporting from a sentiment point of view, is favoring the yen. The economic news as well, we've got weakness in Aussie, strength in yen, bearish +2 on this pair. The technical trend is bearish, it's under the moving average on the daily, and therefore my trading bias is short. So very nice snapshot of the potential trades I can take. I am also going to say live right now that I am going to be increasing my risk now. So I'll be increasing my risk from 200 USD to 300 USD. I think it's time. I think I'm ready to start, putting a bit more risk at play, making things a little bit more worth it, especially swing trading and not having the trade frequency like a day trader. Instead of having trade frequency, I'll bump up the capital risk a little bit more. I've been reading Market Wizards as well, and a lot of the guys that do Excel are risking a little bit more compared to the standard 0.5%, 1 or 2%. Again, my account's very, very small, so risking 5% on a $5,000, $10,000 account is, you're comparing that to guys that have millions and 100,000, 200,000, 300,000 to the millions. So it's nothing. I can increase my risk. Based off my trading data at this point in time, the longest loss streak I have is 6 or 7, I believe, which still is way below breaking point. So just a FYI, something to note. I will be increasing that risk and we'll see how that goes. So that's it for the weekly fundamental analysis. Let's jump into the actual charts now, because the charts are very interesting in terms of what I want to see. So let's go through the trades. Let's go through, what do I want to do first? Let's just go through the trades that aren't setting up. So UJ we said is favoring a bit more of a bearish setup, and you guys can see it is still above the MA, so I'm not going to touch that. US 30 again favoring a bullish setup in terms of from a technical sense, because of weak economic data right now in terms of the economic fundamental side of things. I am going to be on the sidelines for this. I don't want to enter this trade. It just doesn't have conviction. Okay, cool. Let's do the potential trades. So the two potential trades I wanted to trade was against the Aussie. We got AJ here and we got AU here. Let's start with AU. You guys can see we did take a loss previously. Took a loss here. We shorted after that rejection wick and that big doji. It is extended, so we took a loss here. I've got another zone marked up through here. I think that's a better point of reference. It's a bit more of a big retracement here. We've got price moving from here. So if price does move up here, I'll definitely look to get in somewhere in this region here. So that's AU. AJ, we're actually in this trade right now, and we go on a daily. We are below the moving average. We had a big spike down. Price did retrace up to through here. And what I saw a H4 resistance. Twice it touched, and then it sort of dojied, rejection wick. There are signs where this is holding, right? We've got rejection wick, calm down. Doji, calm down. Rejection wick, doji. Just really sporadic, not really sporadic, but erratic sort of behavior on price. It doesn't know where to go. I took a trade here, stop loss here. I did take a partial position out at around 2.11. It should have been 2.5. I don't know why price put me in at 2.11, but anyways, I took 25% off there. So we pretty much, if we do get taken out, because I haven't moved my stop loss yet, we will be, minus 0.5 R on this trade if we do get stopped out. If the price does break down, I'll be looking to trail through here, and then obviously trail. I might look to take another partial here, because if we look through here, that'd be an 8R position there. So I'll look to take a partial around this 8R, 7.5, 8R region. There'll probably be another 0.25, to be honest, nothing more than that. And then we'll look to trail the rest of the 0.5 R. But again, that's if price goes down. If it doesn't, it is what it is. I'll take that loss, but I'm very happy with this AJ trade right now. The other trade that I'm currently in is gold, and gold is, from a fundamental sense, I'm no longer bearish on gold. I am actually quite neutral on gold. We have already taken this position. So with my trading, if the economic fundamental analysis and the bias changes, I'm still staying into it. I've put my risk in already. I have trailed gold stops up through here though. So we are, I think I've actually trailed it here. Let me double check. I have my broker login on my phone. So let's check gold. Let's see where I put that stop loss. Gold. Where are you? My stop loss is, so my stop loss is above that rejection wick there. So basically if price comes out and tags me out, I'll be at a, let's just say 0.8 R loss. Pretty much a free trade at this point now. So very happy to get taken out. Again, momentum's shifted now. If this does break, I'll look to trail here. We'll look to trail along. If price does reach this support here, which should be around 2.8, I would say 2.8, 2.7, I'll look to get a partial of that. Again, that partial will probably be at most 30% of that trade, and we'll look to trail the rest. So that's pretty much it for those two trades. I will catch you guys on the next one. Peace.